So at this point, homeowners are already witnessing property values collapse at the fastest pace since the Great Recession. It is now official that the United States housing bubble has finally burst, and home prices are in free fall with no floor in sight after 2 years of the stratospheric price of appreciation. Ladies and gentlemen, the housing crash is here, and it's worse than we may all think. Wells Fargo has already begun laying off mortgage brokers, which is a sign and indication of what is likely to come. This downtrend is escalating much faster than experts anticipated, as mortgage rates exceed the 7% mark and home sales continue to plunge across the country. One of the largest sectors of the U.S. economy is the housing market, and the fact that several flashing red warning signs are appearing there indicates that trouble is imminent. A severe downturn is intensifying, and the housing market numbers, most recent reports, are staggering. The U.S. GDP contracted by 1.3 percentage points in the third quarter, and this is according to the most recent data released by the National Association of Home Builders, which was the greatest decline that we've seen since 2007. Mortgage applications and originations are no longer what they once were, and mortgage applications and purchases have fell by 41.8% on a year-over-year basis. Now, throughout the severe recession, home sales are also in free fall. In September, they fell for the 8th consecutive month. In the West, they plummeted the most sharply by 31.3% from last year. In the Northeast, down 18.7% from last year. And in the Midwest, falling 19.7%. Now, due to the highest mortgage rate since 2002, pending home sales overall fell by an astounding 35% just this month, the largest drop in at least 7 years. Data from the Mortgage Bankers Association indicates that housing will continue to become less affordable even if prices keep decreasing. And over the past 3 months, home prices have been declining by nearly 2% per month, the fastest pace of home price declines recorded since the Great Recession. Now, this month, they reached a new high of 7.16%, and this is according to recent data published by Black Knight. And prices are falling in some markets at a rate that is nearly 7 times faster than the national average. Therefore, prices in September decreased by 13% in San Jose, California, down by 10.8% in San Francisco, California, and down 9.9% in Seattle, Washington. Since Redfin started keeping track in 2012, more than 1 in 5 properties that were up for sale last month experienced a price decrease. This is record-setting pace. The biggest irony in the market at the moment is that even though the price of housing is steadily declining, the cost of housing is still climbing to new highs. Now, on the other hand, they are still up 4.8% over the last 6 months, 13.1% over the past year, and 42.2% since the start of the pandemic. So, for example, if a median price property had been acquired here recently in September instead of earlier in the year, the buyer would have spent 5.1% less for the same property, approximately $427,500 as opposed to about $450,000. But with a 20% down payment and a 30-year mortgage, their monthly mortgage payments would have increased by over 10%, a $260 increase. The company said that the monthly principal and interest mortgage payments on the median price home have increased painfully by 73%, or roughly $930 from a year ago. In some circumstances, the cost of a mortgage payment has increased by $1,800 due to current mortgage rates. The main obstacle noted by Jeff Tucker, an economist with Zillow, is that in parts of the country like San Diego, even after putting down 20%, you're still looking at a $4,500 a month mortgage payment. Now, to be honest, that's a lot of money and is significantly higher than what many people in San Diego are even paying for rent. Consequently, owning a home is less affordable now than it has been in decades when you consider rising mortgage rates, high home prices, and rising salaries. The current view in the sector is that it's extremely improbable that housing prices will return to their usual level of affordability anytime soon. The affordability forecast for the market remains dire, as the typical American family would need to spend over 30% of their income on monthly mortgage payments at present rates. In the coming months, people who work in the mortgage industry will suffer greatly because, according to a chief economist, Daryl Fairweather, the housing market is currently seeing its sharpest turn since the 2008 housing market meltdown. Many people still remember the suffering that our society endured in 2008, but following that, national property values declined by 27% from their high, with local markets experiencing losses as steep as 58% from previous housing market overheating. And that drove prices higher beyond what the fundamentals could sustain. Now, home prices would have to drop significantly in value from where they are currently for affordability to return to normal levels. And that's without including the current mortgage rate in the equation. So a Wall Street economist recently predicted that the first stage of this new bubble collapse would see a potential 80% plunge. And after that, they would plunge further due to falling housing demand. We'll see. Home values are under tremendous pressure as a result of rapidly increasing mortgage debt. And Ian Shepherdson, the chief economist at Pantheon Macroeconomics, predicted that home sales will continue to decline in 2023. By the beginning of the following year, sales will have reached an incomprehensible minimum level, where the only people selling their homes are those who have no choice because of their employment or personal circumstances. Discretionary buyers are rapidly vanishing in the face of the nearly 400 basis point hike increase over the previous year, led by Federal Reserve Chair Jerome Powell. Shepherdson stated, "The bad news is that prices have much further to fall before the market properly adjusts to the decline in demand, and the first price plunge will only be the beginning." End quote. Furthermore, as of today, just a handful of U.S. states were impacted by the housing bubble in 2008. And according to Moody's research, out of the country's 322 regional housing markets, 100% will experience a decrease in home prices, with some of the most overpriced areas like Boise, Idaho, at risk of experiencing a 77% crash. Now, given that Shepherdson currently predicts the first round of home prices declines to be between 25 and 30%, if the unemployment rate rises above 6%, and mortgage rates continue to rise, and further tightening of credit conditions for millions of U.S. businesses, it won't be long before mass layoffs are announced, on top of the layoffs that we've already seen. Other analysts believe that as the Fed struggles to manage inflation, mortgage rates could reach double digits in the coming months. The terrifying inflation spiral and initial expansion of the housing bubble were caused by the Fed's reckless behavior and the Fed's determination to keep raising interest rates in one of the most aggressive tightening cycles in decades would lead to a historic financial and economic disaster in the United States as they attempt to solve one issue by creating another. Billionaire Barry Sternlicht recently advised on a CNBC interview to prepare for a significant housing market implosion and a severe recession. The economy is in serious trouble. And if the Fed keeps this up, there's going to be a big recession and people are going to lose their jobs. And that's not good. So this is neither a seller's nor buyer's market, really. And rather, it is a situation where everyone is poised to lose. Now, we may soon witness a crash that will make earlier crashes blush, in which many people will lose everything. All indications point to the fact that this is only the start of a nightmare crisis that will be far more devastating than what we went through in 2008. And in addition, extremely bad weather is on the horizon. Please, folks, prepare. So, is there some truth to the thought and idea that we will in fact own nothing and be happy? And should we all prepare for homelessness and starvation? What do you guys think? Comment down below. You guys take care. Be safe. I'll see you on the next one.